Today's topic is about the banking system in China, which is currently collapsing according to Hayman Capital Management. My name is Alexander Kofi Bangnia. Let's go into the details of the whole situation.
Warning that China is currently experiencing a banking system collapse and that investors should pay close attention to trillions of dollars in real estate losses. Hayman Capital's Kyle Bass joins us this morning. Good morning to you. The implications of this, in your mind, are what? Geopolitically, economically? Just walk through the dominoes here.
Sure. Well, glad to be here, Andrew. I think it's important to understand the architecture of their system and what drove the great Chinese miracle on the economic side. It was unfettered growth and even speculation in the real estate markets. They've got upwards of 100 million apartments or condos that are vacant today in China. And again, the architecture of their banking system is really important to understand. They've got roughly, I'm gonna use dollars, but it's really in RMB. They've got about $57 trillion in banking assets. They've got about 2 trillion in banking equity. And then they've got their local government financing vehicle market, which financed all their real estate. Local markets is a $13 trillion market where 90% of the market's in default. So when you just think through all those numbers, Andrew, that dwarfs what U.S. banking system lost in the global financial crisis. We lost about $800 billion. We think that the real estate losses are 4 trillion at least. And we think that the local government financing vehicle market, we don't even know where the bottom to that market is. So to have a properly functioning capital market, you have to understand the banking system, and their banking system is in free fall right now.
Okay, so let's stipulate, assuming you are correct, there's sort of two larger questions. One is obviously what are the issues for multinational companies doing business in China, what's going to happen to their earnings and all of that. And we can talk about that. There's also the geopolitical question and maybe the political question about what this does to the power or lack of power to President Xi Jinping. And I asked that question because I spoke just last week, or it was a week and a half ago now, with the president of Taiwan, who actually said because of the economic challenges that she sees China facing, she doesn't believe, for example, that China would go forth with an invasion, for example, of Taiwan.
Yeah, I also know the president of Taiwan, and I think publicly she has to say things like that. But I think if you're thinking through this logically, if Xi Jinping is backed into a corner and he's got youth unemployment somewhere between 20 and 40%, he's got disillusioned youth, he's got a real estate market that's collapsed, he has wealth management products that aren't paying. His regime is in real risk if he doesn't refocus the national narrative. And my view on that is a move on Taiwan would refocus the national narrative more than backpedaling in financial markets. So while I understand her desire to not be invaded, and we all hope that doesn't happen, but if you were to look back over the last 50 years and choose a date and a time in which you thought America was its most vulnerable and had the worst leadership it's had in the last 50 years, I think you would choose 2024 as maybe one of your strike points. So I think all of those factors come together, whether it's financial, political, or geopolitical altogether. I think all of the arrows, unfortunately, point to something negative happening in the near term.
And what does that look like? I understand the argument that politically, if you're having these challenges, there's a little bit of a don't focus on that ball, focus over here for a little bit. And I see that. But also, by the way, if you're having massive economic challenges internally, it also creates a genuine complication with pursuing some of these other objectives for them politically.
Yeah, I mean, as you've seen them, Xi Jinping and his comrades move around the world, begging the Middle East to settle oil and RMB, because, as you know, if this were to happen and the U.S. were to actually sanction someone, our sanctions on Russia were not even a 5% sanction. We didn't touch their energy business. We left their banks on SWIFT. We let Russians freely travel around the world. I mean, we really didn't do anything to Russia to inhibit their ability to operate. But I do think if we were to properly sanction China on this maneuver, they need 12 million barrels of crude oil every day. They need 8 BCF of LNG every day. They import 40% of their food every day, and they have to buy it in dollars. So, Andrew, they've got to figure out how to piece together willing global trading partners that won't adhere to U.S. sanctions. So it's very complicated for them. But again, if you listen to Xi Jinping and forget about the media and whatever you read, just read his speeches since 2017.
Right.
He tells you what he's going to do.
Let me ask you a different question. Given the number of American businesses that have large enterprises in China, dependent on China, do you think, and let's put aside the Taiwan piece for a second, but just straight earnings, straight economic growth in that country and what it's going to do to these companies, if in fact you think it's as bad as it is that built into the stock prices? And if it isn't, are you shorting them? What are you doing?
Yeah, no, we haven't been shorting anything in China since 2016, so that I could give you what would deem to be an unbiased report on what we're seeing over there. But I think when you look at multinational businesses, I meet with these CEOs behind the scenes, Andrew, and I think it's important to note that many of them are doing all they can to move their supply chains out of China as fast as possible. Some can move quicker than others. They're not going to publicly declare it until it's over. But I can tell you that the majority of them are moving as quickly or as much as they can. And in the end, some are going to get caught with too many assets, too many revenues, too much supply chain in China when the music stops. But it's clear where the music's headed. It's just how long is it going to take something really negative to happen?